Welcome to Money is Freedom, a podcast exploring how finance and freedom connect in our lives. Created from thoughtful research and narrated by Notebooklm AI, this series brings you clear, meaningful insights into finance and beyond. Welcome to episode 17. Today, we dive into the intersection of macroeconomics and cryptocurrency as we explore Bitcoin's $100,000 milestone and the latest unemployment data. What does the U.S. labor market tell us about the Federal Reserve's next move, and how is it shaping the crypto market's future? Join us as we unpack these pivotal trends and what they mean for investors navigating 2025 and beyond.
Hey everyone, and welcome back. I am so excited for today's deep dive because we are going to be talking about something that is, well, let's just say it's pretty mind-blowing.
I agree. This one is definitely a fascinating topic.
Yeah, so remember when you wrote that blog post about Bitcoin and you called it a
global digital asset?
Yeah, the global digital asset. Well, guess what? Bitcoin just blasted through the $100,000 mark. And get this, it happened right as the December jobs report came out.
Wow, so maybe there is a connection between the macroeconomic climate and the crypto world after all.
That is exactly what we're going to try to figure out today. Now I know what you're thinking.
What am I thinking?
Okay, maybe not. But a lot of people are wondering, is this just a coincidence? Or are these two seemingly unrelated events, Bitcoin hitting this huge milestone in this jobs report, are they actually connected somehow? And if so, what does it mean for all of us?
Well, one thing's for sure, that $100,000 price tag, it's a big deal.
Okay, so Bitcoin hits $100,000. That's huge. But is it just hype, or is there something more to it? You know, something actually driving this surge?
Well, to understand that, we have to look at the bigger picture. And that's where the jobs report comes in. And it's a bit of a mixed bag. On the one hand, we see strong job growth, 227,000 new jobs added. That's fantastic. But then the unemployment rate actually ticked up a bit to 4.2%, so it is a little confusing.
Yeah, that is a bit of a head scratcher. Strong job growth, A&D rising unemployment. What's the deal with that?
Well, to really understand what's going on, we need to dig into the details of the report. For example, the construction and tech sectors are absolutely booming.
Really?
Oh, yeah. But on the other hand, retail is taking a hit, which kind of suggests that maybe we're seeing the impact of, shifts in consumer behavior and all those advancements in technology that are happening.
Okay, so how does this all tie back to Bitcoin? It feels like we're talking about two completely different things.
Not necessarily. See, the market reacts to what it thinks is going to happen in the future. And right now, everyone's watching the Federal Reserve basically holding their breath to see what they're going to do.
Wait, the Fed? What do they have to do with Bitcoin? And why is everyone so obsessed with them?
Well, it all boils down to interest rates. When the Fed cuts rates, it basically makes borrowing money cheaper. Businesses can invest more, things start moving faster. It's like giving the economy a shot of adrenaline. And historically, Bitcoin has tended to do really well in those kinds of environments.
Hold on, you said cutting rates, but didn't the jobs report show a rise in unemployment? Doesn't that usually mean that rates go up?
Usually, yes. But this time, things are a little different. Most experts think the Fed is much more worried about keeping the economy going strong than they are about that little uptick in unemployment. They are actually predicting a rate cut, maybe even as much as 25 basis points at their next meeting in December. And that's sending a really strong signal to the markets.
Okay, so a rate cut could be good news for Bitcoin. But how do we know that's what's actually causing the price to surge? Is it just a coincidence that it hit $100,000 right after this jobs report came out?
It's more than just a coincidence. Right after that jobs data was released, Bitcoin's price jumped even higher before kind of settling back down a bit. The market definitely saw that report as making a rate cut a lot more likely, and people probably started thinking, okay, if the Fed's about to make money cheaper, then Bitcoin could be the place to be.
That's pretty interesting. So it's not just about the numbers in the jobs report itself. It's about what those numbers tell us about what might happen next with the Fed.
Exactly. And there's another piece to this puzzle, too.
There is. Okay, I am all ears. What is it?
It's the institutional investors. They are getting into Bitcoin like never before. We're seeing all these new Bitcoin ETFs popping up, and even some really big corporations are starting to add Bitcoin to their list of assets. It is not this fringe thing anymore. It is going totally mainstream.
Okay, so we've got a potential rate cut that could make Bitcoin even more appealing. Plus, we've got all these big players jumping into the game. No wonder things are getting exciting. But I think the big question on everyone's mind is, can this last? Is this sustainable?
That is the million-dollar question, isn't it? To understand what's next for Bitcoin, we actually need to look back and see how it's performed in similar situations in the past. Think of it like checking the historical weather patterns before you plan a trip.
So you're saying we need to look at those past economic cycles. Or let's rewind for a second. You mentioned something earlier called post-halving cycles. I have heard that term thrown around, but honestly, I have no idea what it means. Can you break that down for us, and how do these cycles relate to Bitcoin?
Okay, so imagine the total supply of Bitcoin as a pie. Every 4 years, something called a halving happens, which basically cuts the rate at which new Bitcoin is created in half. It's like someone is slicing that pie into smaller and smaller pieces.
So less Bitcoin is being created over time.
Right. And historically, after these halving events, we've seen some pretty significant price increases for Bitcoin.
That makes sense. Less Bitcoin available, plus more and more people wanting a piece of that pie.
Exactly. Classic supply and demand. And right now, what's happening in the market is starting to look a lot like what we saw in some of those previous post-halving cycles. We've got more liquidity in the system and potentially a pretty loose monetary policy coming from the Fed. It's a combination that has, at least in the past, led to some big gains for Bitcoin. But, history doesn't always repeat itself perfectly. And there are a lot of other factors that could, shake things up for Bitcoin in the future. I mean, think about all the crazy stuff happening around the world right now.
Ah, yes. Geopolitics. Always a wild card.
Ah.
So what kind of global events are we talking about here? What could really impact Bitcoin in, say, 2025?
Well, imagine this. Trade tensions escalate between a couple of major economies. Or there's some political instability in a region that's really involved in Bitcoin mining. Suddenly, the traditional markets get spooked, and investors are scrambling for a safe place to put their money.
And they might turn to Bitcoin.
Exactly. Because Bitcoin, with its decentralized nature and limited supply, it starts to look like a pretty attractive option in times of uncertainty. It's like a digital safe haven.
Okay, so it sounds like keeping an eye on those news headlines is just as important as watching what's happening in the economy, right?
Absolutely. Geopolitical events can send these huge shockwaves through the entire global economy, and those shockwaves, they definitely reach the crypto market too. But Bitcoin's not this isolated thing anymore. It's all connected.
So to sum it up, we've got this potential rate cut from the Fed, growing interest from these huge institutions, and the unpredictable nature of global events. All of that could impact Bitcoin's price. It's a lot to think about.
It is, and it's why just looking at past price trends isn't enough. You really have to consider the bigger picture, all those forces at play, both inside the crypto world and out in the real world.
Okay, so if we're looking ahead to, say, 2025, what are the things you're really going to be watching to kind of get a sense of where Bitcoin might be headed? What are the big indicators?
Well, for one, I'll be keeping a close eye on inflation. If inflation keeps going up, people might start turning to Bitcoin as a hedge against that, kind of like they do with gold sometimes. And then, of course, there's the Fed. Every single word they say about interest rates will be analyzed by like a million people, so definitely pay attention to what they're saying and what they're doing.
Okay, so 2025 could be a wild ride for Bitcoin investors.
Volatility is definitely part of the game when it comes to crypto, but that doesn't mean you just have to sit back and cross your fingers and hope for the best. There are some things you can do to navigate this, let's call it a dynamic environment.
All right, so let's talk strategy. What advice would you give to someone who's really excited about Bitcoin, but also wants to be smart about managing their risk?
Well, first of all, diversification is key. Don't put all your eggs in one basket, Spread your investments across different asset classes. And the other thing is, don't get caught up in the day-to-day price swings. Zoom out a little bit. Focus on the long term. Remember, Bitcoin's story is still being written, and we haven't even seen its full potential yet.
I like that. Focus on the long term. We've talked a lot about economic indicators, about these big institutions getting involved, about global events, and even a little bit of history. But I feel like there's one piece of the puzzle we haven't really talked about yet, and that's technology. How could those advancements in tech shape Bitcoin's future? Could those new innovations disrupt everything, or could they actually make Bitcoin even more valuable?
That's a great question, and honestly, it's one that deserves a whole deep dive of its own. I mean, think about the impact of things like AI or quantum computing, or even the development of entirely new blockchain networks. The world of technology changes so fast, and the crypto space is right there at the forefront of that change.
It makes you wonder how all those emerging technologies might impact Bitcoin and really the entire crypto ecosystem, right?
Absolutely. Will they be competitors, collaborators, or something else entirely? I think that question, how those things interact, is going to continue to shape the financial landscape for a long, long time.
It's both really exciting and a little bit overwhelming, to be honest.
Yeah, it's definitely both. But that's part of what makes the space so captivating. It's like a constant learning curve. There's always something new to discover.
Okay, so we've covered a lot of ground here. From Bitcoin's record-breaking price to the latest jobs report to geopolitics, even touched on some of those emerging technologies that are out there. But before we wrap up, I want to leave you with one last thought to kind of chew on.
Okay, let's hear it. What's the final takeaway?
Well, we've been talking a lot about all these external forces that could impact Bitcoin. But what about the internal dynamics? What's happening within the Bitcoin community itself? I mean, remember, Bitcoin is decentralized. It's powered by a global network of users and developers.
That's such a good point. The decisions made by that community, the direction they choose to take the technology, that could have the biggest impact of all on Bitcoin's future.
Exactly. Things like figuring out how to scale the network or enhancing privacy, or even those debates about the role of miners. All of those internal factors are going to shape Bitcoin's evolution.
Yeah, it's a good reminder that Bitcoin isn't just some digital currency. It's a whole ecosystem, and it's constantly adapting and changing, and that's what makes it so fascinating.
Okay, so on that note, I think we've reached the end of our deep dive for today. I hope you've enjoyed exploring all these intricate connections between Bitcoin, the economy, and everything else that's shaping the future of finance. It's been quite a journey.
It really has been. It's amazing to see how far Bitcoin has come.
When you first started writing about Bitcoin on your blog, it felt like such a, kind of a niche thing. But after today's deep dive, I mean, wow. It's clear that Bitcoin is a major player on the world stage now.
It's definitely not on the sidelines anymore, and I think that's why it's so important for everyone, whether you're a hardcore investor or just curious about crypto, to understand these connections. It's bigger than just, what's the price of Bitcoin today? It's about understanding how the whole financial system is changing, really.
So for our listeners out there, what's the one thing they should take away from all of this? What should they be thinking about as they try to, navigate this crazy, exciting world of crypto?
Honestly, I think the most important thing is to remember that Bitcoin's story is still being written. We are so early in this whole thing. So yeah, things change fast and it can be a little overwhelming, but just stay curious, keep learning, and don't be afraid to ask questions.
That's great advice. And, you don't have to figure it all out on your own. There's a whole community out there, people who are really passionate about Bitcoin. Find them.
Exactly. Connect with other people, join the conversation, and just keep exploring. The more you learn, the better decisions you'll be able to make, for your own financial future.
Well, I think that about wraps it up for our deep dive today. Hopefully you found this conversation helpful.
It was a lot of fun.
And to everyone listening, thanks for joining us. Keep your eyes open, stay informed, and keep on exploring. Until next time.